For 35 years, a promise was kept. Everything inside a Dollar Tree store cost just $1. Then they raised prices to $1.25, a 25% increase. Instead of losing customers, they made more money than ever. Here's why breaking their most sacred rule was the smartest decision they ever made. There is a silent thief that visits every wallet, an unseen force that works slowly, day by day. We call it inflation. It makes the money in your pocket worth a little less tomorrow than it is today. $1 in 1986, the year Dollar Tree was founded, had far more buying power than $1 in 2021. For a regular store, the solution is straightforward. When the cost of their goods goes up, they simply raise the price for the customer. It happens so often we barely notice it. But Dollar Tree was not a regular store. It had built its entire brand on a fixed price, $1. This was its strength, but it was also its cage. As inflation crept up year after year, the cost of everything Dollar Tree bought went up. By 2021, that $1 was worth only about 40 cents compared to its 1986 counterpart. Dollar Tree found itself at a critical juncture. The company was faced with three difficult paths. It was the path of shrinkflation. The price stays the same, but the amount you get gets smaller. Eventually, products get so small or flimsy, customers feel cheated. The second option was reducing quality. A race to the bottom can destroy reputation and drive shoppers away. The third option was the most terrifying: to raise the price. Would customers understand? Would they feel betrayed? Would the name Dollar Tree become a joke? But as the other options faded, leadership began to wonder. What if they tried? What if they just raised the price? To save the promise, they might have to change it. Before making a change that would affect thousands of stores and millions of customers, the company needed data. In select stores, they introduced Dollar Tree Plus. They tested prices like $3 and $5. Customers didn't run away. They responded positively. They saw these items as a good value versus big box stores. Armed with this knowledge, they designed a bigger experiment. In a few hundred stores, every single item moved from $1 to $1.25. They tracked sales figures, customer traffic, and items per basket. The data that came back was stunning. Even with the 25% price increase, transactions did not fall off a cliff. Total sales per store shot up dramatically. It proved the bond was about the feeling of a great deal. And at $1.25, it still felt great. The psychology of a quarter. Why did a 25% price increase not lead to a 25% drop in customers? The human brain is not a perfect calculator. Our perception of value is complex and emotional. For 35 years, Dollar Tree trained customers to see their stores as a treasure hunt. The jump from $1 to $1.25 was a clever choice. A single quarter, familiar and manageable. It maintained the single price magic. You still didn't have to check price tags. With that extra quarter, they could stop shrinking products and bring back items and brands that had disappeared. Customers noticed the price change and the better products. The price hike improved finances. Improved finances allowed better products. Better products increased perceived value. That made $1.25 feel even more like a bargain. Customers weren't just paying more, they were getting more. The brand shifted from everything is $1 to everything is a great deal. It worked. The competitive landscape. Dollar General had variable pricing up to 10+ and grew by stocking practical items at realistic prices. The $1 constraint was making Dollar Tree irrelevant for actual needs. Customers would go elsewhere when they couldn't find what they needed. The move to $1.25 gave Dollar Tree breathing room and allowed thousands of products to return. Food, household goods, seasonal items, a wider variety became possible. Post-price increase, Dollar Tree gained market share from Dollar General for the first time in years. It kept the simplicity of a single price while improving the offering. The change didn't just solve a financial problem. It repositioned the company as a stronger player in discount retail. When the dust settled and the new price was rolled out nationwide, the financial impact was staggering. The story is told most clearly in the company's financial reports. With every item now costing 25% more, revenue saw a massive and immediate jump. In the fiscal year following the full price change, Total revenue increased by billions of dollars. But revenue is only part of the story. The more important number is the gross margin. It went from a dangerously low level of around 30% to a much healthier level, closer to 36%. This increase in margin flowed directly to the bottom line, net profit. It was a transformation, funding renovations, higher wages, and a stronger supply chain. When Dollar Tree announced the price change, the stock price jumped. Investors understood the mathematical power of that extra quarter. In the months that followed, billions were added to market value. A change this massive cannot happen overnight. It requires careful planning, clear communication, and a phased execution. Small-scale pilots de-risked the decision and built confidence. They spoke openly about inflation and framed the move as saving the Dollar Tree experience. The rollout happened in waves, store by store, region by region, over several months. They updated systems, printed new signs, and retrained employees. As prices changed, better selection returned immediately, a promise delivered right away. By showing, not just telling, they built understanding and acceptance. Execution turned a risky decision into a smooth transition, preventing chaos and reinforcing a consistent message. Every great brand is built on a promise. For Dollar Tree, the promise was simple: everything's dollar. Sometimes, the promise that made you successful can become the thing that holds you back. By clinging to the old promise, they sacrificed quality and selection. Moving to $1.25 was an act of corporate courage. The new promise isn't a number. It's the continuation of the treasure hunt and a simple, fixed-price experience. It's about great products and surprising finds. Customers proved more loyal to the experience than to the number. The brand's identity was not destroyed, it was reborn. Dollar Tree evolved, stronger, with better merchandise, same simple promise of value. So, what is the final lesson from this remarkable story? It is a simple equation, but a profound one. Sometimes, the smartest and most profitable decision a company can make is to break its own rules. The world had changed, the rule had not. The engine of growth had become an anchor. The move to $1.25 was more than a price change. It was a declaration of freedom. They realized customers wanted the feeling of value the dollar once represented. That insight unlocked the entire strategy and its massive financial success. Billions in new revenue, dramatically higher profit margins, a soaring stock price, and a store now able to offer a better, wider selection to its customers. The risk of breaking the promise was huge, but the reward was even greater. This is a story about a quarter, and about courage, strategy, and the willingness to change. It teaches us that no business model is sacred. No promise is forever. For Dollar Tree, breaking the rules was the beginning of its most profitable chapter yet. That's the profit equation. Sometimes breaking your own rules is the most profitable move you can make. Subscribe for new business breakdowns every Tuesday and Friday. Get the free weekly analysis at the link in the description.